Hello again, people. Right, um, bit of a tough night sleeping last night, actually. So it's now 5:38 in the morning, and I'd spent some time messing around with the OTGEA because I'd promised a video for hands and kept getting interrupted. But there is, and obviously that delayed the process, but there's an upside to all of this, which is good, which meant I was able to have a late night or an early morning, whatever way you want to look at it, and look at the gold trade. I love this gold range production trade because I was laying there trying to sleep, and as you can see, I'm up early. I was unable to sleep, but trading is all about belief. And that's what occurred to me while I was laying there counting sheep and God knows what else. I totally believe in my method, which is, this sort of supply and demand exhaustion, if you like. I call it trend trading, and it is trend trading because that is what the process of forcing out the buyers or the sellers until finally there's nothing else and the price can only go one way, which is my belief, and it works. The other thing that I've only recently come to believe is, and it works, is that if you've got a range period, whether it's an Asian range or whether it's this little box down here, the orange line that you can see there and there, that's the range on cable that is formed on the first 15 minutes. If you know it's got to be formed, then surely you can trade the formation using supply and demand, using the lower time frames. Another element of belief is that every time frame works in exactly the same way. So when you stack up all these beliefs, you build a strong belief, there's no other word for it, in what you do, and consequently when you enter your trade, you know you're trading absolutely 100% what you've planned. And for me, this is 17 coming on probably 18 years of planning, finally finding a method and then just refining it, really. It's not changing. Once you've decided that whatever trend trading or belief of the three candle reversal, they are all the same things. Three candle reversal is a trend. If you're new to what I do, this is an uptrend: low, high, higher, low, higher, high, higher, low, higher, high. Well, that's an engulfing bar. So that was the uptrend, broken by this downtrend, which is just the engulfing bar. So that's a pretty bad example, but let's find another candlestick example for you. Apologies for all the lines on here, but that's what I do. Here's a nice little example here: low, high, higher, low, higher, high, and then you haven't got the three candle reversal in three candles per se, but eventually you come on down until you break the low of this candle here, which would have happened over here with a close probably about that candle there. But you've also got the 1, 2, 3 lower high, high, low, lower high, lower low, VIX Sporandios, lower high there, combined with a three candle reversal close there. So you've got trends within trends going on in that instance. So three candle reversals are trends in themselves, and inside that, if you look at the structure or the fractal structure of the candlesticks inside there and look at the swings, you will see a trend: high, low, lower high, lower low. So all I'm ever trading is trends, and what that trend is where they're coming back to try and entice buyers to push the price further up. And what you're seeing with the lower high is that the buyers are not happy with that decision. The sellers have overtaken, and once you've broken the part of the trend that's tried to force the price up with a new break below, that's when the sellers have taken over and there is no option but to carry on down. And these blue lines, I've explained this many times, they're hand drawn. They just explain where, once you've broken that demand area there, where they push price, blue line would be drawn there. I advise you to draw them manually so that you know what you're looking at. That would have been the start of that demand area, because it broke that high there, the green candle's high, and went on to produce that. So and failed to make a new high. So that's what I believe in, trend trading, and all that is the patterns that replicate human nature, if you like, that I truly believe now is all done by algorithms and computers, except when you get the big players, the hedge funds and the central banks and stuff get involved at the busy times of day, and then it is just, if you like, bedlam, because the price will just spike and do anything it likes. But you can still trade that perfectly well. You just need a lot more experience. And once again, the belief system that I've got allows me to make judgments about what price will do, because I know that historically, things like this, you expect them. You have to expect them, and that's why you have to put stop losses in. Look, they've just taken out masses and masses of sellers by pushing it back up again straight away. So there's another 30 pip trade on this downtrend. There is this is what I really wanted to talk about. If you notice the previous trade, the range was this dark green box is the Asian range. This could still go even further, but there's yesterday's range, there to there, which was 107 pips. Here's today's range, which is from roughly there to there, which is 151 pips. When you put this indicator on your charts, the daily line box indicator, then it makes it very easy to look at. It has actually got a facility to put the pip count in there, but I find it just gets messier and messier on the charts. But these ones that look quite small, because of the huge moves, the average seems to be about 90 odd. This will prove me wrong. No, 98, nearly 100. And this one looks roughly the same, but smaller, 80, say 70. So this morning, when I was over the night, should I say, middle of the night, when this I found this move here, that one there, near the daily pivot, then the range was looking like this. That was the range of gold at that point. Well, not even that. It was crazy. It was like that, 18, 19 pips. So that's the green box I'm talking about. So we know, what do we know about this? Well, we know the range has got to make about 80, 90 pips. 90, 100 is sort of roughly the average. So at your 19 pips, you've got a box. The range has got to grow. Tick that box. A box, we're in a downtrend. There is no way in any shape or form I want to be going long. We've got all these areas that of supply that have made price go up, or demand at that point that made price go up, turned into supply when the sellers came into the market and there were no buyers left. So tick box short, descending trend line. That just shows you the trend really drawn on the line chart, and then various other stuff as well. There's an H4 low in here. There you can see the H4, if I put a mouse on it, H4 low. That was being tested when I was above it. Daily pivot in there. There's the daily open there, which made me think that would be potentially tested to the long side. So I've taken moving averages off my charts because they just the only reason I had them on there was for the hourly 8 EMA across every time frame, just for the distance from the daily open. But now we can clearly see where we are. Price is currently or has currently moved 144 pips away from the daily open, that white dotted line. So we've got all these different things that give us a reason to trade. Once the price had closed below the H4 low, basically that was its own little box, the H4 highs and lows. Then there was even more possibility that the price would go further on down. As you can see, it's hit the previous day's open, a significant level. It's also hit the S1, part of the pivot indicator, FXI pivots, and then price has reacted to it. There's yet another H4 low. You know, what came first, the H4 lows, or the pivots, or the daily indicator? Well, look how it's created that level of resistance once again there, or there's a supply area being formed there. Wouldn't want to be shorting this at this point here, but then you're starting to get into fundamentals. What I want to be getting into is the meat and potatoes, if you like, the body, the power of the move, the start of the trend. Trend reversals is another belief system. A trend will reverse at a chosen level, you know, of like resistance, or in this instance also supply, or a half round number, quarter round number. There's always got to be reasons for price to reverse, and when it does, then you can start to apply the RSI, another strong belief method borne out by hours and hours of study. And the RSI in itself is a belief that the RSI histo bust, break and close that I talk about all the time, and just look at the YouTube videos for a proper explanation of that. But trends came first, swing trends. 3 candle reversals I realised were the candlestick versions of a swing trend, and then the RSI matched the 3 candle reversal. So all of a sudden we've got the perfect indicator, and it's not self-fulfilling stuff. We've got the it is, you know, what I believe. We've got the trend, we've got the 3 candle reversal, and we've got the RSI histo, and then our belief of supply and demand. So sorry for the long-winded and slightly off the cuff video, but I've been thinking about this a lot during the night, and I thought, why not make a video about it? And it's backed up by a couple of really nice trades, 18 and 30 pips on gold, and the trend of belief system, if you like. Thanks for watching. Have a great what day is it today? Wednesday.